This week, from July 14th to 18th, 2025, marks a pivotal turning point for digital assets in the United States, a moment that many in the industry have been anticipating for years. Lawmakers have officially dubbed it Crypto Week, as the House of Representatives gathers to debate and vote on three landmark bills that could fundamentally reshape the landscape of cryptocurrency regulation in America. For years, the U.S. crypto industry has operated in a state of regulatory limbo, with unclear rules stifling innovation, driving entrepreneurs and startups overseas, and leaving investors uncertain about the future. Now, a powerful coalition, including the Trump administration, key House leaders from both parties, and industry advocates, aims to end this confusion and bring clarity to the market. The bills on the table address some of the most critical and hotly debated questions in the crypto world. Are cryptocurrencies to be treated as securities, commodities, or something entirely new? The answer will determine how projects are launched, traded, and taxed. How should exchanges and trading platforms be regulated to ensure both innovation and investor protection while preventing fraud and manipulation? What's the future of stablecoins and digital dollars? Will the U.S. embrace a central bank digital currency, and how will private stablecoins fit into the broader financial system? Congress is working to build a comprehensive framework that encourages responsible innovation, protects consumers, and ensures the integrity of American markets for years to come. The world is watching closely, as the decisions made in Washington this week will send ripples across global finance, influencing how other nations approach digital assets. Whether you're a seasoned crypto veteran, a curious newcomer, or simply someone interested in the future of money, Crypto Week promises to shape the next chapter of America's financial story, and perhaps the world's. At the heart of Crypto Week are three major bills, each targeting a crucial area of digital assets. The Clarity Act defines which digital assets are securities and which are commodities, ending the SEC-CFTC turf war. The Genius Act creates a regulated framework for payment stablecoins, requiring full backing by cash or government bonds and federal oversight. The Anti-CBDC Surveillance State Act prohibits the Federal Reserve from issuing a central bank digital currency, citing privacy concerns. Together, these bills offer a holistic approach, clear rules for assets and exchanges, a secure path for stablecoins, and a safeguard against government surveillance. Their passage would signal a decisive U.S. policy, embracing innovation, protecting consumers, and preserving financial freedom. The debates this week will determine if this vision becomes reality. The stakes couldn't be higher. The Clarity Act is the foundation of this regulatory overhaul, finally answering, what is a digital asset? Bitcoin, fully decentralized, would be classified as a commodity under the CFTC, giving it legal certainty and attracting institutional investors. The Act streamlines exchange regulation, replacing a patchwork of state laws with a single federal license, making it easier for platforms like Coinbase to operate nationwide. Centralized projects, however, would be treated as securities and must register with the SEC, protecting investors with greater transparency. Importantly, the Act allows projects to transition from security to commodity status as they decentralize. This balanced approach encourages innovation while safeguarding the market. For the first time, businesses and investors will have clear rules to follow. The Clarity Act could unlock a new era of growth for U.S. crypto. The Genius Act is setting its sights on stablecoins, digital tokens pegged to the US dollar that have become the backbone of trillions of dollars in crypto transactions worldwide. These tokens are designed to offer the stability of traditional currency while harnessing the speed and efficiency of blockchain technology, making them a crucial bridge between the old and new financial worlds. Under the Genius Act, every stablecoin would need to be fully backed by cash or short-term government debt, such as treasury bills. This means that for every digital dollar in circulation, there must be a real dollar or equivalent asset held in reserve, ensuring that users can always redeem their tokens for actual money. This requirement is designed to prevent the risk of sudden collapses and to build trust in digital dollars. By enforcing these strict backing rules, the Act would transform stablecoins into a legally recognized, safe, and reliable form of digital cash. Consumers and businesses could use them with confidence, knowing their value is protected by law and by tangible assets. With this new regulatory clarity, experts predict the stablecoin market could explode in size, from $250 billion today to over $3 trillion by 2030. This growth could unlock a wave of innovation, powering new use cases in payments, cross-border transfers, and digital commerce that were previously impossible or too costly. Imagine a world where you can pay for groceries, send remittances to family overseas, or close business deals instantly and with minimal fees, all using regulated digital dollars. Everyday transactions could become faster, cheaper, and more accessible, benefiting both individuals and businesses. Of course, not everyone agrees on the best path forward. Critics warn that strict regulations could stifle innovation, limit competition, or even introduce new financial risks if not carefully designed. They worry that smaller startups might struggle to meet the requirements, leaving only big players in the market. Supporters, however, argue that the Genius Act strikes the right balance, protecting consumers and the financial system while encouraging healthy competition and innovation. By making stablecoins a pillar of the modern financial system, the act could help the U.S. maintain its leadership in digital finance. Now, Congress faces a critical decision. Lawmakers must weigh these trade-offs carefully, considering both the risks and the enormous potential rewards. The choices made today will shape how Americans use, trust, and benefit from digital money for years to come, reshaping the very future of finance in the digital age. The Anti-CBDC Surveillance State Act draws a clear line. No government-issued digital dollar in the U.S. Supporters fear a central bank digital currency would enable mass surveillance, tracking every transaction and eroding financial privacy. They warn of dystopian scenarios, government limits on purchases or funds that expire, made possible by programmable money. By banning a retail CBDC, the bill champions private sector innovation and user privacy. Instead, regulated stablecoins would serve as the digital dollar, without government control. This act signals America's commitment to digital finance that respects individual rights. Its passage would be a landmark for financial freedom. As Congress debates, crypto markets are on edge. Bitcoin trades near $109,000, with investors waiting for regulatory clarity that could trigger the next big move. The Clarity Act's passage is seen as a bullish signal, potentially unlocking trillions in institutional capital. The Genius Act could supercharge stablecoin growth and defy innovation. Any setbacks or watered-down bills could spark a sell-off, making Crypto Week a high-stakes event for Wall Street and Main Street alike. Analysts predict volatility, with Bitcoin possibly surging past $120,000 if the bills pass. But the journey isn't over. Senate approval is still needed, likely stretching into September. Investors are watching both the immediate reaction and the long-term path to full regulatory clarity. Crypto Week is just the beginning. America's push for comprehensive crypto regulation stands out globally. While the U.S. moves toward a unified federal framework, other countries take divergent paths. Spain, for example, has tightened crypto oversight, requiring exchanges to report user data and allowing asset seizures for tax debts. In contrast, Connecticut has banned state agencies from holding digital assets, reflecting local skepticism. Meanwhile, Nauru is embracing crypto, creating a regulatory authority to attract Web3 businesses and drive economic growth. These varied approaches highlight the global debate over crypto's role, threat or opportunity. Even within the U.S., state and federal policies can clash, complicating compliance. The world is watching to see if America's model becomes the global standard. Crypto Week's legislative push is backed by a coalition of lawmakers who see clear rules as vital for U.S. leadership and innovation. They argue that regulation will protect consumers, keep jobs onshore, and strengthen the dollar's dominance in the digital age. Supporters believe the Clarity and Genius Acts will provide the foundation for responsible growth, much like early internet regulations. Critics, however, worry that regulation could stifle crypto's disruptive potential, or fail to protect against new risks. Some fear government-sanctioned gatekeepers, others say the bills don't go far enough on consumer protection. The debate centers on balancing innovation, decentralization, and safety. This ideological clash will shape the final laws. The outcome will define America's crypto future. As Crypto Week unfolds, all eyes are on the House debates and the highly anticipated final votes for the Clarity Genius Act. This is a defining moment for the future of digital assets in the United States. as lawmakers from both sides of the aisle weigh in on the direction of crypto regulation. The atmosphere is charged with anticipation, and every decision made in these chambers could have far-reaching consequences for the industry and its participants. Alongside the Clarity Genius Act, the anti-CBDC acts are also up for debate. The margin of victory in these votes will reveal the true depth of bipartisan support or opposition within Congress. It's important to pay close attention to any last-minute amendments, especially those that could impact stablecoin reserves, consumer protections, or the very definitions of decentralization. These changes can dramatically alter the scope and effectiveness of the legislation and may be introduced in response to intense lobbying or shifting political winds. Key speeches from influential political leaders will offer early signals about the bill's prospects as they move to the Senate, where the debate is expected to intensify. Even if the House passes all three bills, the Senate will bring new scrutiny, possible amendments, and perhaps even unexpected alliances or opposition. The reconciliation process between the House and Senate versions will be the last major hurdle before the president's signature, and it could introduce further changes. For investors, builders, and anyone interested in the future of digital assets, staying informed is crucial. The details emerging this week will shape the U.S. crypto landscape for years to come. This week marks a pivotal chapter, but it's only the beginning. The story of digital assets in America is still being written, and the next few months will be critical in determining its direction.